So instead of the world's two largest economies coming together in a coordinated fashion to fight this pandemic, it's actually brought them even further apart. These accelerating trends of decoupling, supply chain localization seem to be accelerating. So what sorts of long-term structural changes do you see in the global economy when we come out of this pandemic?
Well, this is a significant risk. Financial markets have not sufficiently taken into consideration. So national authorities, whether it's U.S. or Euroland or China, each major economy is doing their own in terms of monetary, fiscal stimulus. That's absolutely necessary. But this is we're talking about global twin crisis, health and economic crisis. Without effective coordinate global responses and collaboration, it would be doubtful that we could really be effective in containing the pandemic, but also really stimulate the global recovery. So right now, specifically in China, both PBOC, the central bank, and the Ministry of Finance have introduced a broad array of monetary financial stimulus and fiscal stimulus. So I guess there's still room for them to do more, depending on obviously Q1, which I think is going to be dismal. Actually, I'm more bearish than the median consensus forecast. I think it's probably the contraction is more severe than that. Maybe as deep as a double digit. But anyhow, so second quarter is starting to stabilize, but China is not outwards yet. Consumer sentiments, business confidence is still very fragile. On top of it, almost all the China's trading partner is in deep contraction. So external demand has dried up. So China definitely is under a lot of pressure. And, I think that requires very strong policy responses.
And Fred,
but
on
also,
that point, is that policy response that we've seen from China so far, this very disciplined, moderate approach, is that enough? What other ammunition should they be using?
Well, they just probably need to do more of that. Actually, that's very interesting for you to observe. Yes, they have been very proactive, but in terms of magnitude, actually it's far less than peers, including U.S. or Europe, and also far less than China's policy package back in 2008, 2009, as a part of consolidated global response in terms of economic recovery. So I expect that the government is prepared to do more. They want to be disciplined in the sense that they are conscious of the financial system and some of the imbalances in the economy. But I believe they are very prepared to do a lot more as they deem necessary.
Fred, you said you were bearish. How bad do things get in China? How bad do they get globally? And what are the opportunities thrown up for you at Primavera?
Well, so like first quarter, like the double-digit contraction, so in the order of 10% or even more. So that's definitely worse than was a consensus forecast. And for the world, and maybe just a little bit later, for the world, maybe second quarter, was just as bad as the first quarter in China. But the key is to read how quickly economies could rebound from the trough, whether it's in Q1 in China or Q2 in the rest of the world. That depends on, again, very effective, strong policy measures, and also really, importantly, depending on how quickly the infection curve will be flattened or even crushed. So a lot of variables to watch. In terms of investment opportunities, as every crisis in history, as the prices are sufficiently low, there's still some fundamentally attractive sectors or companies there. So that could be interesting targets. However, we have not seen significant decline, or there was quick decline, but then also quick rebound. So I think we are really monitoring very closely. So at this point in time, we're more focused on. Go ahead.
Fred, so just very, very quickly, industry groups you're interested in, the ones you're avoiding, perhaps because everybody else has gone in there.
I'm sorry, can you repeat your question?
I was asking what industry groups are you finding attractive, and which are the ones that you're avoiding, perhaps some which have seen a lot of people go into them?
Oh, absolutely. So the sectors that have been hit hardest, travel, hospitality, and so definitely we would like to stay away from it. The sectors we are constructive are the ones that we have always been focused on, really still consumer, technology, healthcare. Those are the sectors we have been very active even before the outbreak. So now, it become more interesting.